Hello and welcome to Coin Vantage, where your go-to guide for all things cryptocurrency. Today we're delving into the fascinating world of Bitcoin's October prospects. Whether you're a seasoned crypto pro or new to the game, we've got you covered. Let's explore the latest insights on Bitcoin in October and what it means for your investments. We extend a warm welcome to the month of October as a historical favorite among Bitcoin enthusiasts for its positive outlook. Surprisingly, September turned out to be one of our strongest months, despite the unwarranted negativity and misinformation being circulated by others. Let's delve into the details. As anticipated, significant price fluctuations occurred in Bitcoin between the time of recording this episode and the present moment. We observed a substantial price surge, closely followed by a market correction, leaving many to question the fate of the October rally. However, let's not rush to conclusions. Here is a breakdown of the price action courtesy of our esteemed friend Eric Crown. His analysis suggests not only has the upward momentum not been completely derailed, but there are also signs of hidden bullish divergence on the chart. This implies that maintaining our optimistic outlook might be well-founded. Examining the white moving average, which represents the daily moving simple average, we notice that it has, so far, been resistant to the recent price movements. Simultaneously, the voices of Bitcoin bears have grown louder across various social media platforms, claiming victory. This trend has likely caught your attention. Based on our prior observations, this scenario follows a typical pattern. An initial test of the 200 simple moving average following a prolonged consolidation phase often serves as a strong resistance point. However, it's crucial to emphasize that this particular instance is distinctive. The uniqueness lies in the fact that it represents a higher high coupled with the establishment of a higher low. Consequently, we now have a both higher low and a higher high compared to the previous peak. Furthermore, the convergence of the moving averages, specifically the green 55 exponential moving average and the yellow 21 exponential moving average, is becoming evident within this price range. Should Bitcoin manage to maintain its position above this threshold, especially around the $27,000 range, where the 55 and even the 21 moving averages are converging, we see a potential opportunity unfolding. This scenario suggests that Bitcoin is poised to establish another higher low during this pullback, marking the continuation of its upward trajectory. While it's possible that our assessment might not align with the outcome, the probabilistic models we delve into later are built into this premise. Now we know what you might be thinking. Technical analysis is just astrology for men. But if that were the case, then you can call us out. We've found that sound TA tends to yield more accurate results than relying solely on intuition. We can't be sure whether it's your morning mood, how you wake up, or a news article, whether real or not, that's affecting your sentiment. Regardless, now that you see that October may not necessarily spell doom and gloom, we can return to our spirited October enthusiasm. Let's get back to the video, courtesy of our TA expert, Eric Crown. Here's an intriguing Bitcoin statistic. Only 5 times in Bitcoin's history has September concluded on a positive note, without exception. In each of these 5 instances, Bitcoin's value appreciated throughout the following fourth quarter. So if we're talking about the beginning of the fourth quarter leading up to the year's end, history tells us we've consistently seen positive results. These iterations have shown the last 3 months consistently ending in the green, and you'll be so successful that you might consider quitting your job, your marriage, and your entire life. Well, perhaps not to that extreme, but the point is, it's highly favorable for Bitcoin from a historical perspective. Whenever September ends on a positive note, it bodes well for the rest of the year. To provide further context, the last 2 times this occurred, it was the year leading up to the halving, which is precisely where we find ourselves now. The track record has been remarkably bullish. It's crucial to acknowledge that history doesn't necessarily repeat itself, but it certainly rhymes, and we're currently witnessing a familiar tune. Today, Bitcoin is precariously holding onto the $27,000 mark. The question remains, where might it stand at the end of October? Only time will tell, but we'll be here sharing this journey with you. Of course, there will always be naysayers proclaiming this time is different repeatedly. In truth, there are differences this time around, primarily due to the unprecedented $1.5 trillion in bond losses. It's mind-boggling. Listen to this. Since Jerome Powell initiated the rate-raising environment at the end of 2021, losses on the U.S. Treasuries have exceeded $1 $1.49 trillion. These repercussions are showing up on the balance sheet of banks. Consequently, financial institutions are grappling with paper losses amounting to $1.5 trillion, rounding up from the previous figure. As the Treasury plans to increase its issuance and interest rates continue to climb, this shortfall will inevitably grow. Now, let's focus on what's unfolding. Long-term yields are finally starting to surge. Just look at the 10-year Treasury rate breaking free from a trend line that has since in the 1980s. Of course, we're just jesting. It hasn't been 300 years, but this trend line has been held firm over the years. In a mere 24 months, the global borrowing rates have surged from 0.5% to a 5% spread. Utterly remarkable. Another crucial point to note is that the yield curve isn't inverting. Instead, it's steepening once more. This typically precedes an economic downturn, with a recession often following once it returns to the zero line. Janet Yellen has also raised concerns about a potential recession, especially if a government shutdown, which we couldn't evade for a few weeks in the United States, comes to pass. Is the October recession merely a distant memory, or is this going to be different? Together, we will uncover the answer. The question of whether things will play out differently this time is one we frequently ponder. In 2017, the prevailing sentiment, what was "this time is different," and now we're facing a broader perspective tagged as "this time is different." Many individuals point to various factors to justify the notion that this era differs from its predecessors, and there's a good chance they are correct. However, from our perspective, the risk of not having exposure to Bitcoin, potentially a safe haven asset class, and the new digital gold as we enter a possible era of stagflation or increased money printing to bolster the American economy during challenging times, poses the key question: should we have no exposure to Bitcoin this time? Should we invest every dollar we possess in the cryptocurrency space? Most likely not, as doing so would likely bring about a great deal of anxiety. The question then becomes, to what extent should we allocate our resources to this venture? With the imminent launch of the Bitcoin Exchange Traded Fund, we foresee a potential meteoric rise in Bitcoin price. Institutions are eager to gain access to it, and it appears they are making efforts to distinguish between gold and bad cryptocurrencies, thereby drawing a clear line in the sand. But our focus is on whether Bitcoin's price will skyrocket. It seems highly improbable that it won't occur at some point, and it's doubtful that everyone will secure an ideal entry price into the Bitcoin ETF. Another disadvantage to consider. This time around, there are significant differences: a looming, colossal, widespread asset bubble, an ongoing recession, and a housing crisis on the brink of collapse. With the numerous variables in play, we remain steadfast in our strategy. A bullish tailwind appears to be imminent, and we adhere to a dollar cost averaging approach. Historically, election years tend to favor the economy, and cryptocurrency markets thrive during the halving years. In our perspective, sticking to the original strategy is paramount of importance. Additionally, there is the FTX exploit, which suspiciously coincided with the commencement of the FTX trial. While we can't confirm if you're aware, FTX fell victim to a substantial exploit, wherein funds were pilfered just before the exchange seemed destined for bankruptcy. Though we can't definitively label it as an inside job, the circumstances strongly suggest it. Given the timing, it certainly raises suspicion. In the last 24 hours, approximately $17 million in Ether was funneled through the Thor chain, directing the transaction ultimately to Bitcoin. This is a recurring pattern involving Thor chain and cross-chain entities moving their assets into Bitcoin, likely due to its greater resistance to censorship. Although their preference for Bitcoin over Ethereum remains unclear, the imminent question is whether we're on the cusp of an era of exponential growth. While this transformation may take time, the notable moves such as Microsoft establishing a nuclear-powered team to bolster AI reveal the ongoing innovation spurred by artificial intelligence and cryptocurrency, as well as novel energy management methods. This narrative underscores the radical transformation of our approach to energy in the face of new technology. It's a pivotal story that paints a picture of a world markedly different a decade from now. To further emphasize the significant changes, Brazil is currently implementing blockchain-based digital identification systems. The creators of such systems may have noble intentions, but the question looms: what if these tools fall into less virtuous hands and are exploited for nefarious purposes? We shall soon find out. But if we're convinced that this will be a momentous narrative in the next decade, decade, digital IDs, digital chips, CBDCs, and the erosion of privacy and individual sovereignty in the name of progress. These are the themes that require our unwavering vigilance. Last but not least, VanEck is proposing to donate 10% of its profits generated by its Ether ETF to core developers. It's a savvy move on their part. VanEck is in the process of developing an Ethereum exchange-traded fund product, and while its acceptance remains uncertain, we have the hunch it will likely gain approval in the not-too-distant future. Its green light might come after the initial approval of the Bitcoin ETF, and should that come to pass, it could expedite Ethereum's ascent to 5-digit price levels. The cryptocurrency landscape is experiencing a dynamic day filled with various developments, most of which point to substantial financial opportunities. While we believe there are compelling reasons to anticipate a robust bull run before the proverbial apocalypse arrives, we'll keep you updated. Stick to your strategy and stay informed, and keep an eye out for more information. Thanks for watching. For more crypto updates and investment tips, subscribe to Coin Vantage, our channel that keeps you in the know about all things cryptocurrency. Don't forget to hit the subscribe button and ring the notification bell.